Hey everyone, it's a question that should come up, and maybe it does, maybe it doesn't, and that's why I'm thinking about it. Because right now it's Sunday, and I'm preparing my trading for next week. Sundays are the best day to do this because there's no pressure, can think calmly, and I'm not in the midst of price action. So one of the things I was thinking about was, how many positions should one have? And if you don't think about it, it's something you should think about. I can tell you what I do. Again, I'm just trying to educate you from my standpoint of what I've been doing and my family's been doing since 1994. There's no magic, there's no secrets, and actually simple actually holds up a lot better than complicated. When you think about it, or we've thought about it, you look at people that have been very, very successful over long periods of time. One of them would be Warren Buffett. He doesn't have tons and tons and tons of stocks. He's concentrated. He runs a concentrated portfolio. The same thing with William O'Neill from Investor Business Daily. Concentrated portfolio. However, there's advantages and disadvantages for that. The advantages, when things are going well, let's say the wind is on your back, and you're in the right companies, then you're going to make a lot of money. But invariably, what's going to happen is you're going to have drawdowns, you're going to have choppy periods, and if you're concentrated, you might have an extended drawdown. The whole idea of having a large portfolio doesn't negate the point of being a diversified portfolio. So what does it mean for me? We do three things. Have a long-term portfolio. The long-term is about 10 stocks, different sectors, companies that are very fundamentally sound and strong with extreme high earnings, consistent results, consistent earners, and we really want to be an owner of that company or a partial owner because that's what really a stock is. It's not a gambling ticket or a lottery ticket. We want to have ownership. So we have that portfolio. So we have about 10 stocks in there. And let's say, for argument's sake, you have a $100,000 account divided in 10. Each position's $10,000. Simple number. I mean, you have $1 million, it's 100,000. Do the math. It's just 10, 10, 10, 10, 10. With the trading account, it is more consolidated. It's more directed. And what we do is, in our portfolio, we only have 5 positions. And we try to find the best stocks fundamentally and technically when the market is healthy. Because there'll be periods we'll be in cash. And there'll be periods we want to be even on margin. And ideally, it's the strongest stocks in the strongest sectors when the market's healthy. How do we know what is a strong stock? We look at it fundamentally. The same story again, that we look at the current earnings, the annual earnings, something new about the company, something innovative. And it goes on to like today's, I only have 4 stocks that I'm looking at for next week. And, take it day by day. But I only have 4 that I'm looking. I'm in one. It has earnings. It's NVIDIA. And if I'm not up more than 8% for my entry before Wednesday, I'm out. Because sometimes with earnings, it can be very volatile and can drop down. So let's say do a quick rewind. The number of positions really depend on you. However, I think in our interpretation, look at people that have been very, very successful and look to emulate them. That's what a mentor is. And that's what I'm trying to do, is to teach you guys the thing that took us a long time to internalize. Hope you like this video. Please share it with your friends. Please subscribe to my channel. And if you have some questions, I'm not going to give you any specific on stock, but in general, I'll try to help you. Thank you very much.